Hello there, everyone. How you doing today? I'm coming to you from South Florida. This is Mazske Finance on Friday, December the 23rd. Nice little breeze out here. See if I can get my hair to lay down. Yeah, whatever. I don't care. I'm old. I'm not trying to impress anyone. Anyway, I want to talk to you about the importance of just one. What do I mean by just one? Just one rental house. Okay. So before I get started, make sure you like, comment, share, and subscribe to my channel, please. I need more subscribers. I'm on the countdown to 1,000. So I got what? I think I checked earlier this morning. It was like 507. So I need 493 more subscribers. So if each of you could get one more, that would work. So with that being said, I'm Maskey Finance. I'm not a CPA. I'm not an attorney. I'm not a financial advisor. So what do I mean by the importance of just one rental house? Just one. What do I mean by that? Okay, here we go. First of all, there's a variety of reasons why just one is so important. Number one, this isn't number one, it's just one reason. One reason why is because for the majority of people out there, they will never get just even one. They'll get zero. They'll never get just one. So, for that reason alone, you're a contrarian. Are watching this video. You are considering getting your first one. Maybe you already have some. If you already have some, keep listening, please. Okay, I'll talk about that as the minutes tick on. I am sitting down here on my dock before I continue on. It's a beautiful morning down here, mid to upper 70s, kind of sunny out, but the temperature is going to drop this weekend, like it is everywhere. And I think around here it might get down 39, 40 degrees. But then tomorrow it might top out around 55, 60, somewhere in there. So it'll be a chilly weekend. They're saying like iguanas, they may fall out of the trees. But I've been down here this morning. I've seen it's therapeutic. I see the fish swimming. Some fish 8 inches long, 10 inches long, a foot long. Sometimes I see just one. Sometimes just a little bit ago I saw I think it was 12. A little school of fish. All right. So back to the importance of one. Sorry to digress. With one, if you have not bought your first one, and let's say you just can't save money, or you think it's going to take too long, let me ask you this. Do you have a Roth IRA? Do you have a 401k? A lot of Americans who are working jobs have an IRA or a 401k. I'm going to talk about a couple little things dealing with retirement accounts, okay? I know I look like kind of funny with my hair blowing back, but I don't care, like I said. So anyway, a couple things with the retirement accounts. You have what's called the 4% safe withdrawal rate, all right? Studies show it might be more like a 3.79 or something, but we'll say 4% for easy math. Let's say if you have $1 million by the time you retire, that works out to $40,000 a year you can safely withdraw, okay? So let's back it down to $100,000. Do you have $100,000 in your Roth? Do you have $100,000 in your 401k? All right. If you do, I think Iguana was just doing something there. If you have $100,000, here's some options for you, okay? Because you might be thinking, well, it's such a piddly amount in my Roth or piddly amount in my 401k. Can I grow it even to $1 million? Because I was in those shoes. I wanted to get $1 million in my accounts. But as the years got closer, I realized I'm not going to get $1 million by the time I retire. Not even half of $1 million by the time I retire. Okay, so if you have $100,000, the bigger iguanas chasing a smaller iguana over there. They do that. If you have $100,000, you could, in a Roth, as an example, I'm not telling you what to do, I'm suggesting things. Things to consider. You could take your Roth IRA and convert it, if that's the right terminology, to a self-directed Roth IRA. Self-directed, there's different custodians. I personally, between the missus and I, we use two different ones. We use Quest and Camoplan. One of us has Quest, one of us has Camoplan. Okay. You can, I think you got to sell your stocks first. That's how I did it. Sold my stocks in there, got cash, transferred the cash over. There might have been a fee I paid. I think I had Schwab. I think I might have paid like $25 or something to transfer the money over. But I put the money, cash, over into a self-directed IRA. By doing that, then, and I didn't have $100,000 in my Roth or the Mrs. Roth when we did this. I had less than that. I bought houses that cost I don't know, $50,000, $60,000, somewhere in there. So when you buy in a self-directed IRA, you pay cash normally. Because if you don't pay cash, it complicates things. I'll tell you briefly what it does. If you use your money for a down payment on a house in a Roth in a self-directed IRA, put 20% down. The remaining 80% you have to get a mortgage on. That mortgage would be outside of the Roth in your own name. So when the rent comes in, it has to be divided. Like 20% goes into your self-directed IRA, 80% comes to you, and then you got to pay the mortgage and whatnot. It complicates things. It complicates things on the tax return because if it's in the Roth, it doesn't go in your tax return. Okay, so I know when you pay cash for a house, the return is not as great as when you buy it outside of it. Okay, I don't care. If you get a good deal and you're getting 10, 12, 14% cash on cash when you pay cash for it, because you can get deals like that. You might have to look or say you're getting at least 8%. Okay, you don't get all the tax benefits, but you get other benefits. Here's the other benefit. If you have that $100,000 in your regular Roth IRA and you go to retire, and let's say you have more, but that $100,000, 4% withdrawal rate is $4,000 a year. $100,000, $4,000 a year. That's not very much, okay? So that same $100,000, let's say you bought a house, pay cash for it, it's in your self-directed IRA, and let's say you're getting net rent is $1,000 a month. Maybe rent's a little higher than that, but you're keeping some out for taxes, insurance, and whatnot, and vacancy repairs, capital expenditures. So say you're making $1,000 a month, or let's say you have over the years you just let the cash build up as the rent goes in there, so because you're not at retirement age, and then when you get to retirement age, you got $20,000 in cash in there. Okay, that $20,000, let's say we'll assume that can cover a rehab. So that means whatever rent you do get, you can withdraw that rent if you're at retirement age tax free because it's a Roth IRA. So let's just say for easy math, it's $1,000. Okay, that's $12,000 a year. That $12,000 beats $4,000 a year on the 4% safe withdrawal rate. You see what I'm saying? $12,000 beats $4,000. You can't live off $12,000, but you can live. It's better to have 12 than to have 4, right? Right. See the magic of just one? Just one can help you out with your retirement. Just one, if you have a 401k, could you take a 401k loan and use it to put 20% down to buy a house with a conventional mortgage? Okay. You have to pay the 401k loan back from your paycheck. Let's assume you're still working, you like your job, you plan to keep working. Can you afford to make the payment back? You can pay it back over, at least when we did it with Vanguard, you can pay it back over 5 years. And you got to pay interest, but you pay interest back into your 401k. So could you even do something like that if you have a 401k and you don't have a Roth and use it to pay the 20% down? We used it to pay cash for a house in Birmingham, Alabama, and it was cheap. It was like $24,000. The rehab was $22,000. I withdrew enough money from the Mrs. 401k to buy the house, to pay closing costs, to renovate it, like $47,000 all in. When I did a cashback refinance, it appraised for $77,000. We got a mortgage for $51,500, so that completely covered all expenses to buy it. So that was my free house, right? Because I paid it back. It was a successful BRRRR. BRRRR is harder to do. It's an advanced real estate investing tactic. Interest rates are higher now. The market's changing. I don't encourage you to try the BRRRR method. Okay, let's go back to the importance of just one. You're saving a down payment. You don't have any retirement account, so you don't want to touch them. You're just saving that down payment. If you get just one rental house, you get a mortgage on it, you get just one, you broke the ice. You got on the first rung of the property ladder. You got your first one. You can hold on to it. My youngest son, he's 25. He got his first house. He told me, he's like, Dad, I want to keep it for a year, or I want to evaluate it over the first year. See how it plays out. See what I think of it. He's young. He's 25. See what happens. Okay, he knows I'm living off my investments, but he's not in a rush, which is fine. It's fine. So then, if you get that one though, you can do that. Take your time. Take your time. Don't be in a hurry. Don't be in a rush. You get that one and make sure you're positive cash flow. And let's say you're positively cash flowing at least $250, $300 a month. And your cash on cash return is at least, for me, 12%, 14%, 16, 18. I like even numbers, 13%, 13.77, whatever. But let's say the numbers are $250, $300 a month positive cash flow. So in theory, as time ticks on, you will increase rent periodically. Sure, taxes and insurance might both go up as well. But as long as the positive cash flow, the rent increases cover that and surpass that, your cash flow over time should increase. Maybe that's all you ever do. You're like my son. I'll use him as an example. He bought when he was 25. Maybe that's all he ever does. By the time he's 55, he pays that house off. If he never pays anything, one penny extra, he pays it off. Now, he doesn't pay a mortgage, doesn't have to pay the principal, doesn't pay the interest. So it's all cash flow minus taxes, insurance, vacancy repairs, capital expenditure, that sort of thing. So maybe he's positively cash flowing, I don't know, $800 a month. If he didn't buy it, he wouldn't have that $800 a month. Okay? But by buying the first one, it breaks the ice. So many people get a mental block. So many people get a financial block. So many people get analysis paralysis. They spin their wheels. They see all these deals on realtor.com or zillow.com, but they can't find the perfect one for them. That's why sometimes the way I did it, I don't advocate it, I don't suggest, I don't encourage you to do it, but if you got my personality, sometimes you got to jump and just do it. Make sure you're not losing money. Make sure it's not an alligator. Make sure you're positively cash flowing. If you're watching this video, you know more than I did when I bought my first one. All right, make sure you're positively cash flowing and jump. Pull the trigger. Get the mortgage. Buy it. Because by doing it, you break the ice. If you're working a job, hopefully you're making enough. You can afford the mortgage if your tenant stops paying. It's just one. Hopefully you can, if a repair comes up, your paycheck's enough to cover it if your tenant's not paying rent, because it's just one. And you can evaluate it. That's how my son is right now. He's evaluating it. He had to rehab it. Shortly after getting it, the tenant had to be evicted. The tenant was already in there. He got, I think he told me 2 months rent. And the tenant had to be evicted. It took a little bit to get him out, but they finally got out. But the rehab then came in at around 20 grand. And he told me just the other day, we chatted, he's going to completely pay off that 20 grand here before the end of the year. That way it's a tax write-off, I guess, this year. But then it's going to be a freshly rehabbed house, and the rent, which was, I think, like $750, should now be probably, I don't know, $1250, something like that. And I guess we'll talk. He's deployed right now. He's out on the water, so it's hard to talk to him. But we'll talk next year. I might be able to talk to him before the end of this year, actually. And once he gets it rehabbed and rented, I'll talk to him about, there's 2 beautiful orange butterflies flying around there. It's so pleasant. So pleasant. I'm sorry. I like nature. It's a joy to see the butterflies. It's a joy. It's a blessing to see the fish. But I'll talk with him, and if he decides to get a second one, I'll assist him with getting a second one. Just like I'll assist you, if I can, with getting a first one. If there's some of you that watch my channel that have emailed me, there's some of you that watch my channel that have emailed me, and I've given you advice and encouragement, and you now have your first rental house. Some of you have your 10th rental house. Some of you have your 20th rental house. All right? But everyone has a common factor. Even myself. We started with the first one. Just one. All right? I'm going to enjoy nature. Take care. Have a great day. Mazke's signing out.